भारत ने 2015 में फ्रांस के साथ मिलकर इंटरनेशनल सोलर अलायंस बनाया, रिन्यूएबल की क्षमता में, नॉलेज शेयरिंग के लिए, कैपेसिटी बिल्डिंग के लिए। आज उसका इंटरनेशनल हेडक्वार्टर भी गुड़गांव में है। दुनिया के 137 कंट्रीज उसके पार्टिसिपेंट भी हैं। भारत ने हार्ड टू अबेट इंडस्ट्री के लिए स्वीडन के साथ मिलकर के लीडरशिप फॉर इंडस्ट्रियल ट्रांसफॉर्मेशन जैसा एक क्लाइमेट एक्शन प्रोग्राम बनाया। और यूएई में जब कॉप हुई तो स्वीडन के प्रधानमंत्री जी के साथ उसका हमने लेड आईटी 2.0 भी शुरू किया। तीसरा, क्लाइमेट चेंज के कारण जो डिजास्टर पैदा हो रहे हैं, भारत ने सीडीआरआई कोलिशन फॉर डिजास्टर रेजिलियंस इंफ्रास्ट्रक्चर एक एक्शन प्रोग्राम बनाया और आज भारत उस मामले में काफी अच्छी नॉलेज शेयरिंग के लिए काम कर रहे हैं। दुनिया में बायोडायवर्सिटी को बचाने के लिए, उसको कंजर्व और प्रिजर्व करने के लिए भारत ने दुनिया में टाइगर कंजर्वेशन के जब 50 ईयर पूरे किए तो हमने ऐसे 97 कंट्रीज जिसमें इस प्रकार की बायोडायवर्सिटी, फ्लोरा, फोना और बिग कैट्स हैं, उनको लेकर इंटरनेशनल बिग कैट अलायंस बनाया। और अगर मोदी 3.0 की बात करेंगे तो 4 जून को जब परिणाम आया, 5 जून को ही पहला प्रोग्राम प्रधानमंत्री जी ने किया, वर्ल्ड एनवायरनमेंट डे पे एक पेड़ मां के नाम अभियान शुरू किया। ये जो पूरे क्लाइमेट में हम जो इस धरती पे आए हैं, तो 2 लोगों का बड़ा हमारे पे एहसान है। एक हमारी माँ का जिसने हमें जन्म दिया, और एक धरती माँ का जो हमारा पालन पोषण करती है। आप बड़ी फैक्ट्री बना सकते हैं, बड़ी गाड़ी खरीद सकते हैं, लेकिन वो सब चीज कार्बन एमिशन करेगी। आप एक पेड़ लगाएंगे तो धरती माँ के लिए ऑक्सीजन पैदा करेगी। इसलिए एक पेड़ माँ के नाम जरूर लगाइए। ये सबसे बड़ा ग्रेटिट्यूड होगा अपनी माँ के प्रति और धरती माँ के लिए। और मेरे को आपको ये बताते हुए खुशी है कि 5 जून के बाद अभी आज इसको 3 महीने होने जा रहे हैं, हमारी वेबसाइट पे 98 करोड़ पेड़ लगाए गए हैं जो लोगों ने पार्टिसिपेट किया है। मैं इस प्रोग्राम के सक्सेस के लिए देश के सब नागरिकों का भी धन्यवाद देता हूं।
दैट्स वेरी इंकरेजिंग। और ये हमने बहुत देखा भी है किस तरह से भागीदारी एक बहुत ही इम्पॉर्टेंट एस्पेक्ट रहता है किसी भी इनिशिएटिव को लेकर, सिंगल यूज प्लास्टिक के बैन को लेकर हो या फिर ग्रीन कवर देश में बढ़ाना हो। आपने टारगेट्स की बात की, मैं एक और टारगेट की आपसे बात करना चाहूंगी, क्योंकि आपसे पहले जो जितने भी स्पीकर्स आए थे सभी भारत का ये जो टारगेट है नेट जीरो बाय 2070, ये जो एक एम्बिशियस टारगेट हमने सेट किया है, सबने इसके बारे में काफी पॉइंट्स रेज करे। आपसे हम जानना चाहेंगे, आर वी ऑन ट्रैक टू मीट दिस टारगेट?
दो विषय हैं। जैसे हम दुनिया में जब ये क्लाइमेट चेंज की वार्ताओं में जाते हैं, तो जैसे मैंने कहा कि हमने दुनिया के सामने जो अपने इंडिसेस रखे उसको समय से 9 साल पहले पूरा किया। अब ये जो क्लाइमेट चेंज की जो वार्ता होती है उसमें एक और कमिटमेंट है हमारा कमिटमेंट ये है कि हर देश को हर दूसरे साल ग्रीन हाउस गैस GHG इसकी एक रिपोर्ट देनी पड़ती है, अपनी इन्वेंट्री देनी पड़ती है। और मेरे को ये बताते हुए खुशी है कि जो पिछली हमारी शर्म एल शेख में जब हमारी क्लाइमेट चेंज की कॉन्फ्रेंस हुई थी, तो हमने 2019 के बेस पे भारत के ग्रीन हाउस गैस की इन्वेंट्री दी, जो इस बात को दर्शाती है कि हमारी इकोनॉमी और इकोलॉजी साथ साथ आगे बढ़ रही है। जहां तक 2070 का लक्ष्य है, आपके पास फ्यूचर के लिए, सर्कुलर इकोनॉमी के लिए, रीयूज, रीसाइकल के लिए टेक्नोलॉजी से लेकर के उसका प्रोत्साहन होना चाहिए।
Well, that was Bhupinder Yadav, Honorable Minister of Environment, Forest and Climate Change, speaking on the sidelines of the 6th edition of the Global Sustainability Alliance SDG Summit, which is currently underway in the national capital. Let's take stock of what the market then is up to, and it's been a bit of a choppy ride for the indexes. We started off marginally higher, picked it up in the green, dipped a little bit, broke the 25,000 mark, and again making an attempt to claw back thanks to the recovery single-handedly in HDFC Bank and Reliance, which has actually jumped up a good 1.25%. If you just bring up that intraday graph, HDFC Bank, of course, has been a more steady one, but Reliance Industries, especially after yesterday's selling of nearly 2%, today that stock picking it up all the way to that 2700 plus level clearly is rubbing off on the index as well. But Kunal, what is it that you're making? It's fairly volatile, within a narrow band though.
No, Aisha, I think I'll probably call today's day as a very good day for the indices, because in the first half, the Nifty was on the verge of breaking below 24,900 levels, led by Reliance Industries, pickup of price action on few large cap names like Siemens, ABB, Cummins, etc., and some pickup of price action on HDFC Bank in the first half, at least today. I think we've managed to muster good strength, and from those sub 24,900 odd mark, to come back to that 25,000 plus levels on an intraday basis. And if we close above this level today, assumingly, I think I would probably call this as a very strong indication that the markets are finding a support at this 24,800 to 900 zone. Now, with renewed strength coming across from large cap names, fresh breakouts from few large cap stocks, follow through price action for sectors like Nifty Realty Index and many of the real estate components, I would probably believe that we could now head back to the higher end of this range for the index. So I wouldn't be surprised over the next two days or so, we try to come back to that 25,200 mark on the Nifty.
Naresh, hi, afternoon. Are you also having that kind of conviction that we could make our way back to 25,200?
So as of now, till the time we don't break 24,700, 24,800, the upside possibility remains up till 25,500 in the near term. Overall, the structure is positive, but we are not seeing follow-up price action. So yesterday it was ICICI Bank which was up. Today it is on the negative side. And today you are looking at HDFC Bank doing a move. Yesterday it was Reliance taking a downtick. Even today in the morning that was in a downtick, has recovered well. But if we keep seeing some follow-up happening the next day, then we get that momentum. So overall, we see a lot of heavyweights doing a one-day move and then again going back to the same range. And in that period, we've been in this range of say 24,900 to 25,200 for the last few sessions. But overall, the breadth is positive. If you look at the mid-cap, small-cap indices, even overall, we are not seeing many downticks or breakdowns as such. So would expect till the time we hold on to 24,700, 900 band, possibility is 25,200 and then 25,500.
So that's the take coming in as far as the market setup is concerned. But Kunal, what's the view on some of these AMC companies? Whether it's a Nippon, whether it's a UTI, whether it's HDFC or Aditya Birla, all are firing up.
Yeah, I think I think it started off with Nippon India. I think last week or maybe start of this week, showing a very strong price action move, wherein I think the stock managed to break past about 750, 770 barrier first, and then managed to move up into a 10% plus kind of a gain over the subsequent next 2 or 3 days. I think now the move is trickling into the other stocks. HDFC AMC today, I think, is a classical sign of a breakout and a very strong price volume breakout. And this is almost the 4th or the 5th consecutive day where the stock has shown positive price action. Today, of course, the volumes being exceptionally high for HDFC AMC. This could also mean that potentially the stock may try and just about to shift its range higher. But the move may stagnate a bit for the next couple of days. So I think a buy and dips could be a good strategy for HDFC AMC. 4750, 4800 could be a good trading range in terms of a breakout. UTI AMC is the other stock which I'll be bullish on even from current levels. The stock confirming a breakout, price volume breakout again at 1300 plus levels where it's trading right now. And looking at the recent price patterns, the stock fell into almost like a 150, 170 pointer correction. So 1300 remains to be a breakout point. Above those levels, we could be expecting 1420, 1450 mark for UTI AMC.
Okay, point taken. The other stock on the downside is KEI, which is down 7%. It's off the lowest point of the trading session. We did speak with the management earlier in the day, and they talked about how they're expecting margins to move up from here on, because this time the disappointment was on the margin front. We'll try and get the management bite shortly, but before that, Naresh, what's the view on KEI and BSE? BSE is, of course, reacting to the Jefferies downgrade.
So both these names have had very strong long-term uptrends, and now We are looking at a pause. KEI, for example, this was the resistance zone. The high was around this 4,800 to 4,900 mark in June as well as in August. And yesterday also it came very close to it, and we've again faltered around that area. 4,100, 4,200 on the downside is a strong support. So expecting the range bound move to continue. BSE had a very strong move in the last 1.5 months from 3,000 rupees to almost 5,000 rupees. The stock could go back and drift lower towards the 4,300 mark is the view going forward.
Okay, in fact, since we're talking about KEI, we're going to take a very quick break. But as we do that, here are what the management had to say about the margin guidance going forward.
We can't give such a long range guidance. We have already guided that this year we expect to do around 10.5 to 11% overall EBITDA in the full year. So our guidance remains same. If we are able to do better, we will definitely aim. We have already given a guidance of a top line growth of 15 to 17% in overall in the full financial year. And we are on track.
Welcome back. You're watching Closing Trades on ET now. Let's take stock of what exactly is happening in the market right now. A bit subdued, but we're off the lowest point of the trading session. We were toying between the green and the red. And right now in that tug of war, the bears are winning because we are in the red, but above the 25,000 mark. In terms of stock-specific action, it is Trent, which is taking it on the chin right now, down about 3.5%. M&M is down in the trading session. Hero MotoCorp, Titan, these are your big names. So clearly it's consumption which is on the back foot, and that's the big question, whether the festive season sales have been a bit disappointing. Let's try and decode that and a lot more with Ajay Vora, who's joining us on the show. He's of course the head of equities at Nuvama Asset Management. Ajay, hi, good to be speaking with you. Well, we were talking about a rural recovery when the monsoon was good and the elections got over. Hasn't really played out to that extent, and then we had the hopes pinned as far as the festive season is concerned, and the initial trends haven't been that supportive. Is there a risk that you see to earnings with the kind of consumption moderation that we are seeing?
Yeah, hi, good afternoon, and thanks for having me on the show. So you are right to an extent, because if you look at how the earnings at an aggregate level also has shaped up since the start of the year, there has been an aggregate cut of somewhere anywhere between, I would say, 7 to 8% so far. And as of now, if you look at the trends at the ground level, that also is looking pretty muted. So we need to see over next 15-20 days, because the moment we get into the festive season, that is when the whole consumption picks up. But my sense is that, considering the downgrades which we have seen across a few sectors, I think that, one has to be a little cautious considering the demand slowdown is for real at the ground level.
Sectors which you see the maximum, which are at maximum risk?
So it is across. So if you look at banks, or even if you look at autos, both the sectors have seen reasonable cuts. And anyways, this quarter we are looking at sectors like metals and cement. They also will be reporting pretty muted numbers. So it's been across sectors. Within consumption also, I would say that consumption is a very broad basket, and therefore stock specific we have seen some sort of downgrades, but I wouldn't say that at an aggregate level there is a significant downgrade as such within the consumption basket.
Sure. Ajay, what's the take on IT then so far? Because it's also been somewhat of a mixed bag.
Yeah, so we have been a bit constructive on the whole IT sector, mainly because we believe that with the rate cut cycle getting aggressive over next few quarters, I think that the whole discretionary spend, which was significantly, there was a pent up demand on that, can eventually flow through. And therefore, if you look at the commentary of a couple of companies which has reported numbers so far, and also a few mid-cap IT companies whom we generally talk to, it seems that the whole demand environment is now likely to get better, and it has more or less troughed out. So we are a bit positive in that space, but obviously, we have to pick and choose stocks because some of the names are extremely expensive. But I think that within that space, still there is enough juice left, I think.
The point coming in as far as the IT sector is concerned, and what kind of outlook do you see for that? What about PSU as a basket? Because whether it was defense, whether it was those power financiers, whether it was the banking names, all had seen a massive rally. Now it's getting a bit sideways for them. What's the expectation from here on?
So within PSU also, it's a very large basket. So we are positive on few things. So as you said that, defense stocks, most of the stocks have corrected quite a lot over last 3-4 months. So my sense is that within that space, and it is a good structural story over next, I would say 3 to 5 years. So there will be certain opportunities in the defense sector where we are very positive. Another space within PSUs where we are extremely positive is the whole OMC space. I think that the whole blended margins, meaning the refining and the marketing margins put together, that can actually surprise the street over next 2-3 quarters. We are not very positive on crude, and therefore I think that OMCs will have that kind of leverage in terms of their marketing margins. So based on that, this whole OMC space, defense, and there'll be certain bottoms up, I would say, within metals also, because we are a little bit, tactically we are positive on the whole commodity space. So there are a few PSU metal companies where earnings can again surprise quite a lot. So there are certain pockets within PSU where we are extremely positive.
That's exactly the question that we posed to a commodity expert, Jonathan Barat, as well earlier today, as to how the China story is going to really play out for metals and commodities as a cluster at large. Here's the opinion from him on where he sees oil prices and, of course, metals as well going forward.
When you look at Brent crude, there's a lot of support around that 70, 71, 72. West Texas is just a little bit lower than that. And if you remember the price action we had middle of last year, it just spent a lot of time bumping up and down from that 71, 72. So I think a 72, 77 range, and my risk is to the top side.
Okay, that's the take coming in on Brent prices. In the meantime, in fact, let's take a look at some of those, crude sensitives. We've been seeing the move on OMCs on one hand and the likes of ONGC and Oil India on the other. And then, of course, paints as a category as well is seeing a fair amount of sensitivity. Ajay, in light of your, view on OMCs, tactical as it may be, do you think the other crude sensitives, paint and the allied themes, tires, etc., as well make for a good tactical play?
Yeah, definitely. So we are again, positive on paints and tires, both the sectors. Paints, actually, if you look at it, over last 3 years, broadly, I would say 100-120 million square feet kind of entire residential space has been sold out by all the organized developers, which I think will be up for possession starting maybe December or maybe a couple of quarters down the line. And therefore, we are extremely positive considering, if the crude stays here, I think the paint demand also can surprise over next 2 to 3 years. And secondly, on the tire space also, if you look at it, large part of the capex is getting over for them. And most importantly, earlier their margin profile used to be in single digit. Now most of the companies have moved to anywhere between 12 to 15% margin. And if raw material prices stay lower, especially on the crude side, because the rubber prices are still higher, I think that there is a room for better margins going forward in this space as well. So stocks are extremely cheap, I feel, especially a couple of tire companies. And with better margin profile and better ROE profile, there is room for re-rating as well.
So that's a view coming in on some of these stocks. But let's take a quick look at the market right now. And of course, you have on the gaining side the AMCs which are doing well. Amber Enterprises is holding up. Nuvama Wealth has joined that AMC party, and then BEML as well. And Voltas too is actually doing quite well for itself. Just wanted to get a better sense from you, Ajay, as far as the financials are concerned. The large caps have finally started participating. I mean, this week, if you look at it, you have HDFC Bank, which is up over 3%. ICICI Bank was doing well for the last 1 week thereabouts. Is it a time to tactically allocate more to financial services and large cap banking at that?
See, I think that overall banking space, if you look at it, the top line growth and the bottom line growth is not very impressive, especially in the upcoming quarter. So there can be some more time pain to this sector. But I think that for someone who is taking 2 to 3 year kind of a view, these levels and these valuations, I think is a good entry point. one may not get a significant up move in the medium term, but I think large part of the overhangs are getting over now. And my sense is that the valuation comfort is pretty significant. So banking definitely looks good, but over 2 to 3 years, I don't think over next 1 or 2 quarters, because the numbers are not going to be that impressive. It may continue to be a laggard.
Right. So where is it, Ajay, that in this current market you're underweight?
Yeah, we are underweight on the banking space.
Okay. That's about it. Let's just take a look at where, in fact, banks are up to. While HDFC Bank is holding up right now in trade, let's see what the rest of the pack is up to, because SBI is fairly muted right now. ICICI Bank, we should bring up that intraday graph. Axis as well, relatively tempered in trade, not doing a whole lot. Kotak, of course, is in the red as we speak right now. And that's pretty much the case with the smaller banking names as well. Kunal, a quick call on the Nifty Bank and where you see that headed right now. And if you could just bifurcate as to where you see the large cap banking pack, HDFC, ICICI, etc. as well.
So the only three names on the large cap side which are still showing signs of strength. First one is, of course, ICICI Bank. That's a chart which is still holding on to its 50-day moving average relatively. The stock in the last 3-4 months was one of the strongest in terms of price performance. So it still continues to be one of the better performing names from the private sector banking names. Now, of late, in the last 4-5 days, we've seen Kotak Bank started to get back into a very strong recovery. So the stock recovered almost 100 to 150 points from sub 1800 levels to 19, 20, 30 approximately. The stock which made a swing high couple of days back. So that's another chart to look out for. Even though the stock is down to 0.5% or 1%, I would still believe that that's a very good territory to go for a contra long on Kotak Bank, because such kind of renewed momentum, even if it leads into maybe a couple of days of price retracement, it eventually leads into a breakout for stock prices. HDFC Bank could be the third stock to look out for. So I think in terms of priority, I would probably look out for, from a short term view, I would look out for Kotak Bank, ICICI Bank and HDFC Bank as, better placed, charts from the private sector banking names. And even for the Bank Nifty relatively. So, we are at a point where the Nifty is trading slight below its 50-day moving average. Bank Nifty is trading above its 50-day moving average. So even in terms of the sectoral strength, Bank Nifty is showing that relative strength for itself as compared to the benchmark indices. So I would probably place a support for the Bank Nifty closer to that 51,300, 350 mark.
Right. Okay. That's the take coming in on banks. In fact, Ajay, we let you go on that note. Good to have you on the show as always. Good getting in your thoughts. In fact, since we're on the subject of banks, let's also hear it out from Sanjay Mukim, Head of India Equity Research at JP Morgan. He talked about his thoughts on banks and where he sees this particular sector headed in the near term.
If you were to somehow scientifically model it, is the Indian financial. The large cap banks, or even let's say the smaller banks, some financial set shows up as being growth stocks with reasonable valuations. The trouble that we've all seen is that the sector has been under pressure for a while. Just performance-wise, it's not kept up with the market. And now we are seeing some pressures on the earnings momentum of financial sector. So there are genuine reasons to believe that the growth momentum will slow down for financials. Cheap, absolute wise, you'll find some utility companies, I guess. I wouldn't classify it as an ugly basket really, but utilities have not re-rated as much as perhaps the rest of the market has. So, and you can find something at low double-digit PE in India in that basket. Almost the rest of the market falls in the other, which is in an expensive category. Whether you measure it relative to their own historical price to earnings bands or relative to peers rest of the world, relative to market, or apart from financials, utilities, and a handful of stocks here and there, almost everything qualifies as big reasonable success.
That's the word coming in as far as the private banking space is concerned. Quickly, let's take the closing trade ideas from our chartists as well. Naresh, what's the closing trade idea?
So that would be about Grasim Industries. The stock has been sideways and is setting up for a breakout move into new all-time highs. So preemptive buy here, once it sustains 28.40, that would be a bigger move. So looks interesting at current levels.
That'll be a buy on Voltas. The stock taking support from its 50-day moving average, showing signs of strength, good movement in terms of price volumes for the stock, expecting it to come back to that 1900, 1920 levels, which is the previous swing high.
Okay, point taken. In fact, that Morgan Stanley upgrade coming in for Voltas today is also adding a bit of a support there. In fact, before we head into the break, let's kind of hear out what the expectation is with respect to Bajaj Auto, because the numbers are expected to come anytime soon. The stock was weak yesterday, was down about 3%. Today it's inching higher. Let's welcome on board Shrishti to talk to us about that. Shrishti, take it away.
Well, not much of a weakness is expected onto the numbers, but definitely the margins will be the key to track, because the main highlight for Bajaj Auto in this particular quarter is the difference in the mix, because after a lot many quarters, the mix has changed for Bajaj Auto. This time we are getting to see that there is more contribution from the likes of the CNG and the recently launched CNG bike that could actually impact the mix, while for Pulsar, the sales have taken a back seat for a bit, and all of this could actually impact the margins, where we are expecting not much of a jump. 20.1% is our expectation, which will be a marginal jump on a YY basis, but just a flat margin on a quarter-on-quarter basis. But barring the margins, we can expect a double-digit growth on all the rest of the numbers. Look at the revenue. We are expecting at 13,305 crores on the top line. EBITDA expected at 2,673 crores, while the profit is expected to see a jump of 11% on a quarter-on-quarter basis, which is not bad, at 2,198 crore rupees. Now, where's the push coming from is indeed the domestic market sales, where the domestic sales have seen a jump of 22% on a YY basis. Average selling price has also been up, and the export have also seen a revival. So all in all, a decent set expected. But going ahead, the festive season sales demand and the CNG newly launched bike, how are the sales penciling in for that, are the key monitorables. Back to you. Back with closing trades right here on ET now. So the recovery definitely is still very much in place, aided by the rebound in Reliance Industries, now holding up 1%. Bharti, of course, has been the strong show from the word go. Hindalco, Bajaj Auto, ONGC and HDFC Bank as well, giving a fillip to the index as we speak. Still under pressure though for Trent. It's down about a good 4%. There's M&M, which is lower by about 2.5%. Hero MotoCorp, Infosys, Titan, IndusInd Bank, these are your laggards in trade. But talk about some of the buzzers, and that's definitely HDFC AMC. That's holding up nearly about 7% in trade. Voltas has been a very strong performer today, a 3.6% uptick coming in on that stock. There you go, HDFC AMC at 4,800 plus levels. Voltas up at 1,880 thereabouts. Cummins is looking good. Navin Fluorine, and then HPCL is the other buzzer in trade. Actually, it's not all that bad for the broader end of the market. While the breadth continues to favor the declines, the gap is not as wide. But let's welcome on board Pawan Parak as well and talk about what he's making of the market right now. Pawan, hi, afternoon. Highlight for us what so far within the earnings has really stood out for you, either the positive or the negative surprises?
Yeah, hi Aisha. I think so far not many companies have reported their earnings, but whatever is out, I think IT is one sector which we continue to like. I think very clearly from now on or maybe a quarter onward, you should see momentum coming back as far as IT revenues are concerned. So IT is one sector which looks good. Some of the data that we picked up from various channels is that this time around, e-com sales are also doing reasonably good, and we're of the view that consumption cycles should rebound back. So within that, we believe a lot of these consumer discretionary companies should start reporting good numbers. And if not good numbers, because Q2 anyways, otherwise is a soft quarter, but I would want to believe that a lot of these companies will paint a very rosy picture as far as outlook for H2 is concerned. So I think very clearly these two sectors look very good to us. And I must also highlight that valuations, while across the markets are very expensive, but in these two sectors, we find that, valuations are just fine. I think they're not very cheap at all, but they're not very expensive as well.
Okay, so that's the take coming in as far as the market is concerned and some of these specific segments for the time being in terms of the market mood right now. Apart from AMC companies and these wealth managers, Amber Enterprises is picking up, Endurance Tech is picking up. What's the view on manufacturing? Even BML for that matter, which has got the award for the first bullet train manufacturing, is perking up. Manufacturing, Pawan, had been, called that theme for the next decade, if not more than that. Do you concur with that view? And are the valuations already baking in the positive, or do you still see room for re-rating for some of these manufacturing companies?
No, absolutely, Anisha. I think manufacturing is one thing. I think it's a very, very, very long cycle as far as India is concerned. India has to go a long way in achieving its manufacturing goals. And I must tell you, this is not only restricted to a couple of sectors. It is now getting more. It is getting expanded to more and more sectors. And we still believe that traditionally sectors like electronics, wherein we've achieved some success, even there over the next 5-10 years, these companies in this sector will continue to do very well. Here, obviously, given that these sectors, these stocks have done already, I mean, they've done already very well. Valuations are obviously very high. Here, one thing that we are actually looking out for is that which are those companies within the space which can grow at more than 30-40% or on a sustained basis for next 4-5 years. If the growth is sub 25-30%, then I think current valuation is obviously not justifiable. But the good thing is that there are companies which can actually grow at such fast rate, and we continue to remain very positive. In fact, as far as manufacturing is concerned, another corollary to manufacturing is logistics. I think that is one sector which hasn't done well at all. With moderating crude prices, sooner than later, we believe that prices at the pumps will also fall, and with volumes recovering and decent margins, a lot of these logistic companies will also look quite attractive from an investment point of view.
We've been talking about as to how the consumer durable space is looking smart. Take a look at Voltas. We just flagged off that that's one of the buzzing stocks in trade. And Morgan Stanley has now upgraded the stock to an overweight from the earlier equal weight, and they've upped the target price all the way to 2035, and the stock 1881 is where that is. They're expecting a 21% earnings CAGR over FY25 to 27, driven by strong volume growth in the UCP business, and they see moderate margin expansion, however, and they're saying that the worst is likely behind the company for the project business, and its Voltbek is now turning profitable according to them. Pawan, within the entire consumer durable space, you think we're likely to see a volume jump up now that the festive season is on and discounts galore on many of these e-com platforms?
Certainly. I think, so there's some part of consumer durable. Classic cases that of air conditioners and your coolers. I think those are seasonal businesses. The season this time around was quite good. And apart from those also, I think, consumer durable as a category is fairly underpenetrated as far as India is concerned. And that is primarily to do with two things. One is that India has achieved 100% electrification, so-called 100% electrification only a few years back. And as and when electricity reaches to more and more households, and second thing that I was referring to was increased per capita income. As both these things come to play, I think consumer durable, given that it's a fairly underpenetrated category, I would want to believe that the growth here would continue to be at more than 10% for next 5 years.
Okay, so consumer durable play here to stay. Clearly more room available in terms of the penetration. But what about the penetration of financialization of savings? That's a big theme as well, which is working out. There is a increased clamor, Pawan, that there is perhaps a bit of shift back to mutual funds and AMCs versus PMS or direct investing. And perhaps that's the reason some of these AMC companies are reacting positively. What's your view on this space?
See, I would want to, bifurcate between, say, PMS or mutual fund. I know one thing for sure, that equity as an asset class is a great, investment from a retail household investment point of view. And given India's, demography, and given India's penetration for financial products, it continues to be way too low. And now a lot of these financial products have been, it's very easily available through online channels and through a lot of other means. So I would want to believe that, despite India's mutual fund industry, something like 65 lakh crores equity and debt put together, and add up a few lakh crores into, say, for example, PMS and AIF, it could easily be more than 100 lakh crores in a couple of years. And that's primarily true with the fact that, one, equity markets, earnings cycle itself is doing very well. That is a trend. And secondly is the fact that apart from equity, no other asset class, has got a potential to deliver such sustained returns over a long period of time. So I continue to remain very positive on these capital market theories, and not only AMCs, but the other other sectors like exchanges or broking companies, the entire capital market pack looks pretty interesting to us.
Right. Pawan, do you sense that, perhaps the festive season could pull off some magic for PV sales, or do you think that's not quite possible?
That seems unlikely. Honestly, that seems unlikely for the simple reason that, I mean, two-wheelers obviously can do well, but X of two-wheelers, I would want to believe that there's some cyclicality in the businesses there. Last 2 years have been quite decent. If you look at last 2-3 months, there haven't been great product launches in this sector. And secondly, what we understand is that there's a decent channel inventory that got built up in the system. So I would want to believe that as far as auto sector is concerned, X of two-wheeler, next 1 or 2 quarters could be a little subdued.
Right, okay, that's the take coming in on what we're likely to see from Motown and whether or not there is any uptick that one can anticipate in the festive season. But, that also brings me to the Hyundai IPO, Pawan, if there is a house call on that.
Without any specific comments on Hyundai, I must tell you a lot of the IPOs that have come up in last, say, a year or so, we avoided all of them without an exception, for the simple reason being that we believe that valuations for a lot of these strong franchisees factor in all the positives, be it not only Hyundai but be it Bajaj Housing Finance or be it other names that got listed in last 1 year or so. So we are good to skip that for the moment.
Okay, so that's the take coming in. But in the meantime, what else is happening in the market? And let's take a look at some of the losers as well. We've talked about the gainers. On the losing side today, KI Industries continues to be down, but it has bounced back from the lows of the trading session. Cochin Shipyard, that OFS happening at a discount, wasn't taken well. A sentiment downtick at that. BSE, that Jeffries downgrade, is coming at work, and then Trent and Polycab, even Honasa Consumer for that matter, is under pressure right now. Within the urban consumption, Pawan, specifically, and I'm talking about the Trents and Honasas of the world and the Nykas of the world, do you see a bit of a moderation in demand as well as hence the stock prices?
I think here you'll have to take category by category. I think as far as personal care products are concerned, I don't know what's going to happen in this quarter, maybe next quarter, but take a couple of year view. I would want to believe that this category is, given that it is fairly underpenetrated, and a lot of these companies are building up great brands, great customized products. So this is one sector which we actually really like quite a bit. And for some of these companies, personal care, you see these companies enjoy some very great gross margins. So as in when business gains scale, revenue comes up, I would want to believe that EBITDA margin expansion will be huge, which will help a significantly higher than revenue PAT growth, right? So I think this is one sector which looks very good to us. Having said that, some of the sectors, especially on the retail, some of the companies on the retail side, one of the companies that you mentioned, valuations are way too high. They are more than priced to perfection. So we would rather want to stay by the side for such companies.
Quite a few earnings as well tomorrow, and we're going to be looking out for not just Nestle's numbers but Axis Bank. That's going to be important. There's of course Wipro and Infosys as well, which are due to report their numbers. And not just that, it doesn't end there. There's Polycab, you have CEAT, LTI Mindtree, Tata Chemicals. So it's going to be quite a hectic earnings day, as also Havells and some of the smaller banking names as well. And yeah, Hyundai Motor IPO as well closes tomorrow, so it's going to be an interesting session. In terms of global data points, you'll have the Eurozone CPI, you will have the ECB rate decision. That's going to be quite critical. Other than that, of course, US retail sales data, etc., which is much later in the evening. But that said, Anisha, after TCS and HCL Technologies, what are we anticipating from Infi?
In fact, can surprise the street a bit, because the street is penciling in maybe an uptick in the guidance, because last time they had already increased their guidance. This time there could be a further narrowing of band. In fact, the street is working with an assumption of 4 to 5% growth for FY25 now versus 3 to 4%. So that, of course, is the big headline. But in terms of numbers, the constant currency growth is still expected around 3%. It's a bit of a wide range this time. People are expecting right from 2.7% to 3.2%. But we are gravitating with expectation of around 3% in terms of constant currency. Rupee revenue is expected to inch up by almost 4%. Dollar revenue closer to $4,870 million with a bit of a margin expansion as well. So 21.3% is what the consensus number is as per ET Now poll. And all of this will trickle down into the bottom line. So a jump up of 5% sequentially so that the number comes closer to 6,700 odd crores. Remember, during the quarter, they had made that Intech acquisition. So that's expected to add almost 1% in terms of revenue. EBIT margin is likely to improve, driven by the operating leverage and Project Maximus, plus the fact that the wage hikes have been pushed. There wouldn't be any impact this quarter. That also is a bit of a factor to watch out for. In terms of the large deal wins, well, Kotak is expecting a $3 billion kind of range. You have Citi expecting a $4 billion. So let's see which side it goes. But overall, the expectation is that the margin is expected to be 22 to 22%. But the top line growth guidance is likely to get improved to 4 to 5% versus 3 to 4 that they had told us earlier.
Okay, Infy under pressure ahead of its numbers, down 2% on the stock, about 2.25 million shares traded at that. But Naresh, how is it that you're maneuvering within the IT pack right now? Because the earnings have been a mixed bag so far, but what are the charts indicating?
So out there, stocks which have continued to show strength have surprised on the upside. So if you look at HCL Tech, the stock continues to make new all-time highs. Same is the case with the Tech Mahindra, which has been holding on to the recent 52-week highs. So out here, wherever the momentum has been strong, whether it's a Coforge, there the trends continue to be strong. The larger cap names continue to be a little more laggard. Say, for example, TCS post numbers has drifted lower. Infosys again is closer to the 52-week high, so that looks more positive. So any dip out there could be an interesting buy going forward post the numbers.
Okay, so that's a view coming in on some of these names. But quickly, let me mark Wipro as well, because we are expecting the numbers from Wipro as well. It's expected that it will be at the midpoint of the range. Last quarter, they had talked about a -1 to +1% kind of show in Q2. We are expecting that constant currency is going to be flat quarter on quarter. That's the reason USD revenue is expected to be $2,630 million with a margin profile of 16.6%, which is 20 bips better than what we saw last quarter. Profitability is expected to be almost 3,050 crores. There is going to be a bit of a positivity or a tailwind coming in from financial services. That's what we've heard from TCS as well as HCL Tech. But manufacturing is something which has been weak, and that might be a pressure point for Wipro. At least that's what we are penciling in at the moment. Operational efficiencies, the rupee depreciation, the overall tailwinds that might support the margin a bit. However, there could be a 1 month hike, 1 month impact of the wage hike. So that might be a bit of a limiting factor. For the next quarter, we are expecting that the guidance will be similar, as in -1 to +1, because they have been a bit conservative, and the large deal wins are expected to be close to $1.2 billion, in terms of the range. But I think with the new CEO coming in, there's going to be a bigger focus in terms of what he has to say about the demand environment, what he has to say about the roadmap that he had laid, whether they're on track with respect to that or not. Those are the things to watch out for Wipro as well. LTTS is the other one that will come out with earnings today, so we are watching out for that one. That's L&T Tech. Whether they maintain the guidance of 8 to 10% growth is something that we should watch out for. That stock will come up for you on the screen as to what it is doing ahead of earnings, holding up in the green. In fact, at the highest point of the trading session, is expected to come out with numbers in the next 30-40 minutes or so. So just watching out for that. Overall, for the market mood, it hasn't changed much. It continues to be HDFC group of stocks which are actually doing well today. In fact, on that note, let's listen into what HDFC Life management had to tell us, because while yesterday the stock was reacting negatively to the VNB margin decline that we had seen, the management on the con call clarified about the issues and the one-time impact which has been there, and going forward how they're sticking to their guidance. Hear out what the management told us earlier in the day.
The value of new business will grow. I've said before, at about 15 to 17% growth, and we have demonstrated about 17.4% growth in H1. That will also continue. Reason that will continue is that is what will add to our embedded value and will over a period of time unwind to cash. So these will become real profits. So it is important that the quantum of profits is something that we don't say no to. Because we are tethered to a new business margin. Third will be the new business margin, which will be an outcome. At the same time, I'm not saying that it will be in a free fall situation. There will be a floor to new business margin, but maybe 100, 200 basis points or in that kind of a range. As long as we are growing on value of new business, that's going to be the focus. Last point I want to mention is a very interesting factoid, and that is of the new customers that, or rather of the customers that came on, were onboarded in H1, 70+% were new to HDFC Life. Now, if we say no to them just because I'm tethered to a particular margin, then those customers are going to go elsewhere. So customer acquisition as a strategy so that down the line I can upsell and cross-sell to those customers also is equally important. So to summarize, top line growth followed by value of new business growth and then new business margins.
Okay, that's HDFC Life. Almost 7 million shares traded and quite a recovery in the stock, much unlike the movement on the stock yesterday. But take a look at some of the other names which are kind of languishing right now in trade, and Polycab definitely is one such case in point. That stock lower, quite a fair bit. In fact, it's down about almost 4% on the spot as we speak right now. So that's definitely one stock. Rallis, on the other hand, very impressive numbers. That stock shot up very well today, and it's managed to stand on to its gains. About a 14% uptick still. The revenues have come in at about 18.5%, and the PAT more than 2x on a sequential basis. EBITDA margins as well have seen a fair amount of expansion. The management is now stating that they're targeting to grow higher than the industry growth, and the objective is to grow the market share in seed segment to high single digit. That's definitely auguring well for the movement on the stock and biggest set of volumes as well. BSE, like we flagged off, there's a Jefferies downgrade. They're saying that the risk reward is now turning unfavorable. Remember, the stock has had a pretty much one-way, very swift-paced rally. If you were to bring up the last 3-month chart alone on BSE, forget what's happened in the fortnight on the stock price. So that's BSE currently in trade. Pawan, where is it that you feel in the segments of the market where you think the stocks have run up too fast, too soon?
Yeah, so I think auto is one sector, we've hardly scratched the surface as far as the electric vehicle is concerned, but a lot of these companies are getting valuations as if EV is 20, 30, 40% of their sales. So this is one segment which we think, very clearly valuations, even at the OEM level, is completely unbelievable in terms of valuation. So auto is one sector where we still feel there's absolutely no comfort as far as valuations are concerned. Apart from that, if you look at other sectors, like for example, retail space, once again, some of the companies, despite how much ever good the performance is, but valuations, once again, absolutely something which cannot be justifiable. And on the other hand, in some of these PSU names also, a lot of the stocks have run up as if, they are great Maharatna companies, which is a fact. We know that they are not Maharatna in terms of their efficiency, agility, and decision-making processes. So these are few pockets wherein we are very clear that this is not a sector or segment we'll be looking at least for next 2-3 quarters.
Okay, point taken. That's the setup right now that we have at our hands, but very quiet at the index level, to be honest. We haven't seen very big ranges today in the kind of moves because it is a Wednesday and financial services expiry still happens today, or Bank Nifty happens today, right?
Yeah, Bank.
Yeah, so Bank Nifty happens today, but there is not a big move in that sense in the 3 p.m. move that we usually watch out for. 100 points lower, it's Federal Bank which is reversing its move. Kotak Mahindra Bank is under pressure. ICICI Bank is also down in the trading session. Naresh, how much credence will you give to the level of 25,000 on Nifty, and the fact that we're likely to close below that, does it give you any indication of a further downside, or what's that line in the sand?
So that price point is 24,700 to 24,800, which was the recent swing low as well. A few weeks back, as well as recently it bounced back from the same price point. So that remains the most important level to look out for right now, rather than the round figure at 25,000. Similarly, on the upside, 25,500 is where there is a gap. If that breaks out, it goes into positive momentum. So this is like a 800 pointer range where we could keep seeing this one day up, one day down moves.
Right. I just want to check in on what the stock of Cochin Shipyard as well is up to. Remember, the government has okayed that 5% OFS, although it's at a discount of about 8% to the current market price. The stock, of course, is languished today from the word go. 5% lower is where it's closing in for the day. For the Nifty as well, it's a sub 25K closing that we're headed in for. Kunal, what does that indicate now going forward for the index alone?
Well, again, still a range for the index, but I think with today's intraday recovery, at least it gives some confidence to the bulls that maybe we may find the near-term support pretty much sooner for the indices. So 24,700, 750 mark, still remains to be a very strong support. We tested this twice, I think, in the last 3 odd months for the index, and on both the attempts, on 2 attempts rather, we've seen a bounce. Even this time around, we saw a bounce of 400, 500 points for the Nifty. So which means that maybe if in case there is a retest towards the 24,700 levels, we could probably get back into a similar bounce process for the index. But on the upside, the cap for the index is at 25,250 odd mark. So I would probably look out for this 500, 400 pointer range for the index. Right now, it looks like that maybe we should be heading back to the higher end of the range before we try and meet the first resistance at 25,200 plus mark.
Okay, point taken. So that's the mood on the markets right now. With that, Pawan, Naresh, as well as Kunal, we let you go. Thanks so much for making time and speaking with us today. But I'll hand it over to Snehi to walk us through the closing trades.
Well, absolutely. Let's take a look at how today's session has panned out for the markets, where you have Nifty50 on the screen up there, 0.4% cut coming in, almost a 100-point drop coming in, and more than a 100-point cut coming in, roughly 130 points from the day's highest point. Also in tandem, you have Sensex, also 0.4% lower is where Sensex is. If you take a look at the broader markets have also been flat. However, the small cap was dilly-dallying between the red and the green, so to say, but no support or no strength of show of strength coming in from the broader markets today as well. But let's take a look at some gainers and losers today. Top gainers and losers on the Nifty today include HDFC Life, Dr. Reddy's, HDFC Bank, Bharti Airtel, Grasim Industries. These have been stocks that have helped the Nifty stay afloat today. We also saw a very smart recovery coming in on big boy Reliance today. That has also helped Nifty not drop much below that 24,955 mark where it is right now. So much below that 25,000 mark. However, on the flip side, what did not do well today and weighed on the index was Trent, down 4.5%. M&M, Infosys, Hero Moto, Adani Ports, all of these stocks are your top losers of today. Now remember, tomorrow you also have the results coming off Wipro, Infosys, Axis Bank and Nestle, of course, from the Nifty50 pack. So watch out for all of these stocks. While all of these were flat, Infosys was the one that was reeling away in pressure, 2% lower. Advance decline ratio evenly spread between the advances and declines today. However, when you take a look at sectoral gainers and losers, you have Nifty Auto, that was your top loser of the day. Realty managed to inch up towards the green today, and that index has ended in the green today. FMCG, Media, IT, Bank, Pharma, Metal, all of these have ended the day, and top sectoral losers today. Let me quickly draw your attention to some big gainers and losers. Rallis on the back of Q2 numbers, that stock did well. KEI, however, was tanking away in today's trade. Railtail, Ashoka Buildcon, Voltas, all of them did well today. Sterlite has announced its foray into data centers, so that stock did well. And on the back of some brokerage notes today, Aditya Birla Real Estate did well on the back of a brokerage note by Nomura. However, what did not do well today was Zydus Life. You had BSE also, that was down 5% on the back of a brokerage note as well. And well, yes, this is how we are wrapping up trade for today with Nifty below that 25,000 mark once again.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.